that radio show. Here, Robert Kiyosaki is.
All right, that one's going. That one's going good. Lovely.
We need to publicly apologize to everyone who bought our titanium pro pan because we lied. Yeah, it's true. The pan is naturally non-stick thanks to its engineered tech.
You dream in stars and dive into the deep, fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain, building your legacy through love and rain. Doing those inspiring soul.
I think I got it. I think that's it. 1, 2, 3, 4, 5, 6, 7, 8. Oh, one more. One more. One more. Hold on, I'm almost there. Almost got it. I got a couple more cameras to go. You figured one camera would be enough, but no. I think that's it. I think that is it. All right, so we're going to do this, and we are going to do, oops, that out of the way. Get that way, this way, right there. I think that's it. All right, all right, all right. So can we see that? The docs chat. There we go. Outstanding. Nice. That's it. Oh, wait a minute. Wait. You got one camera left. Oh, one camera left. Hold on. There we go. That's it. Ready to roll. Wait a minute. This one's not quite ready. It's not quite ready yet. Wait a second. Oh, I forgot to do something. Forgot to do something. Oh, wait a second. No. Cancel. Publish. All right, took me a while to publish that one. Yeah, there it is. Okay, so let's do this. Let's do that. Let's do that. Let's do this. Let's do this. Let's do this. And let's do that. And let's send out the invites. There we go. I think we're ready. We are ready. All right, back to that. Back to there. And get rid of that. Get rid of this. Get rid of this. Back to there, and my glasses, and now we're ready to go. Good evening. Oh my God, a half hour late. How many platforms are you on? 13. 13. Enza, how you doing? Yep, 13 platforms. So we're streaming on 13 platforms. I got 9 cameras, so if you would just give me a little bit of slack when it comes to the questions. I'm going to try to get to each and every one before the evening is over. Let's get the ball rolling. Let's get rid of that. Lovely. First and foremost, number one, my name is James. This is Dividend Stock Talk. I'm investing in dividend stocks for weekly cash flow. I'm looking for a simple, safe, predictable, consistent 1% per week. Now, I promise you, Lloyd, how you doing, Lloyd? I promise you, I'm not going to try to sell you anything tonight. Tonight, we're just looking to learn something. You guys are going to give me stocks to take a look at. I'm going to take a look at them, give you my opinion based on where I'm coming from. Now, you may not understand this, but I am 62 years old. I'm retired, so any money that I make has to do with my wonderful lifestyle. So, yeah, I do pretty well. 1% a week is not bad. I can't see this one right here, right there, and this one right there. I think that's about it. No, right. Rich, Scania, what's going on? I think that's it. All right, good. All right, so let's see who's in the house tonight. Hold on a second. It's coming. It is coming at the most inappropriate time. Who do we have in the house? We got Jim Bibby. What's happening over there? Bushka man. Okay. Cool. Interesting name. Lloyd's here. Who do we have over here? Over here. We got, 136 people already. Okay. We have Andy, Izzy Cat, AJ, Bro Yogi. Okay. K-Tor. Okay. Nickname, Sticks, Mo, Dvorky, Easy Does It, Mr. Shrimp. Sticks wants to take a look at Marvel. We'll pull up Marvel. Why not? MRVL. I don't know why. It's going to be a hell no. Seriously, Sticks, come on. What do you think, dude? Uh-oh. Let's get rid of this. Okay. Now, Sticks, what the hell are you thinking here, dude? It's at the high of the year. Why are we looking at it? Where is the opportunity here? Now, don't get me wrong. I got no problem with Marvel. I actually have some of it. But as an opportunity, what are you thinking? The 30-day, the bottom's here for the year, goes sideways all year long and then shoots up. Now we're up here. Why would I want to buy at the high? It makes no sense to me. Let's finish seeing who's here tonight. Side Hustle 440, what's going on? Bert, good evening. Fila, FL Lena, okay. Sweet Den, nice to see you, brother. Lala, what's going on? Emmanuel, good evening. Armando, Ridge and his horses. Cool. Calvin Hill, Cam, nice to see you. Vetty Shaw, Phil, Carillo. Can you aim the camera? Yeah, we just fixed that one. Melitha Sexton. All right. Okay. First turd of the night. I hate doing this, blocking people and booting them because they're just doing inappropriate stuff. Okay, Sweet Den. Anytime you see somebody doing anything weird or inappropriate, just toss them. Just toss them. Thank you, Sweet Den. Dvorky, yep, 13 different platforms at the moment. We got a couple more we want to put on there. Double J USOY. Okay, never heard of it. USOY. Defiance Oil Enhanced Option ETF. No. Now, Let me explain to you why. I'm not just going to say no, and I'm not saying that it's too risky. What I'm saying is I don't do monthly options. Look at this: June, July, September, December. Those are months of the year. Now, months of the year, there's only 12 of them. So if I'm getting 1 to 2% each trade that I do, because remember, I'm looking for absolutely the minimal amount of risk possible, almost no risk. That's what I'm looking for. Almost no risk. There's risk every time you get out of bed, so don't give me that crap. So almost no risk. But I don't do monthly options because there's only 12 months in the year. And if I'm getting 1% each trade, it's only 12% a year. If I'm doing 1% per trade and I do weekly, that's 52% per year. That's what I'm looking for. So although USOY may be good, it's a monthly and I don't do monthlies. As a matter of fact, I got 5 rules. Rule number 4 is weekly options only. Carrillo wants to take a look at PayPal, PYPL. PYPL, PayPal. Interesting opportunity. Take a look at this. Carrillo, you see that right there? That's what we're looking for. The high of the year, the bottom of the year, up, down. Look at this. And she's turning right there. Let's go through the whole thing. Are you ready? Anytime I look at a chart, I'm looking for 5 things. And I always start the exact same way. 1, 2, 3, A, B, C. Always the same. 1 year chart first. High of the year, low of the year. Where was it a year ago? Where is it now? And what is it doing? That's it. It should take you 2 to 4 seconds. That's it. High, low, was, is. That's it. That's as long as you should take. Don't spend too much time looking at it first. What we're looking for is the high is right here. I don't want to buy it at the high. No. Now, the bottom part, that's a little bit more interesting, and that is a little bit more give and take, but I definitely do not want to buy anything at the high of the year. So, next step. 1 year chart first. Next step, the numbers. As a matter of fact, rule number 5, make sure all the numbers work. What am I buying it for? $43.65. The closest strike price would be $43.50. Now the $43.50 for this week is going for 58 cents a share. That's more than 1%. That's what I'm looking for. More than 1% on a company that I like. Now, wait a second. We didn't look yesterday or the day before, but let's look right here, right now. Find out how many companies are on the list this week. We haven't done it yet, so let's do it right now. We're going to go over to a place called FinViz, FINVIZ, and it is financial visualization. Basically, it gives you a lot of information about a lot of different companies. Whoa, I don't want to see that. Let's get rid of that. Advertisement. Okay. Very first thing I'm going to see is that. But what I'm looking for specifically is on this page right here, the screener. So let's go over to the screener, and I'm looking for one number. And that number is usually right here. What?
The YouTube screen is blocked again.
The YouTube what is blocked?
The one that shows your screen on YouTube.
Ah, damn it. Hold that thought. Well, that's weird. How's that looking? It's going to take a few minutes for it to get there. Let's go check it out. Hold on. Let's get back to here. FinViz, I don't want to see that. I want to see the screener. Well, I'll wait for that. Okay. Interesting number. My channel. There it is. That one. That's tiny as hell, isn't it? So how do I make that bigger? Damn. Damn. Okay, can I do this? Because Jacob told me not to do this. There it is. That's tiny as hell, isn't it? All right. So, what the hell am I? So how do I make that bigger? Damn. Damn. Can I do this? Jacob told me not to do this. Shit. Now, see, I shouldn't be messing around with stuff because this is not my expertise. Shit. How the hell did I get rid of this damn thing? I have no idea how to fix this. Shit. Now, see, that's better. All right. So what the hell am I looking at here? Much better. Okay. Give it a few minutes. It should recycle. Hopefully that's it. Because I really shouldn't be touching this thing because I have no idea what the hell I'm doing for the most part. Oh, we got people signing in down here. Who do we got? We have C. Daniels. What's happening? It's Sugar. Can you give me 5 USDT funded accounts, please? No. How's that for an answer? Okay. So how's that? Is that working now? All right. Let's go find out what's going on here.
Yeah, it is working, sorry.
That's okay. Thank you. All right. Let's get rid of that. Okay. So as I was saying, I'm looking for one number off of this website. This website is called FinViz, Financial Visualization. It gives you a whole bunch of information. Check this out. Exchange, market cap, earnings dates, price, theme, index, dividend yield. I like that one. Average volume, target price, sub-theme, blah, 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 blah. All that stuff. But I'm only looking for one thing. The one thing I'm looking for here, I check it once a week, is this number right here. Okay, I'm going to isolate it and write it down for you so you know what number I'm talking about. Right there. 1, 1, 3, 1, 3. Now, if you remember last week it was 1, 1, 2, 5, 0. Okay, what does that mean? Well, last week there was 11,250 companies available. This week there's 11,313. Where the hell did those all come from? I got no idea. But we have, as of today, 11,313 different companies to look at. You can look at all the pages. Now, some of them you probably heard of. Allegiant, Alcoa, Goldman Sachs, Armada. I have no idea who that is. Besides the point. But this is where I go for some financial information. Not all of it, but it does tell me how many dividend stocks or how many stocks are available. So 11,313. That's a lot. Okay. So now we know 11,313. All right. Back to where we were. PayPal. You ready? Back to PayPal. Now, back up just a tiny bit. I'm looking for 5 things. Very simple. The high, the low, where was it, where is it? That's it. 5 seconds, 3 to 5 seconds. 1, 2, 3, blah, 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 blah. That's it. That's what it's doing. It's not at the high and it's not at the low. It's somewhere in between. Fine. Now let's take a look at the numbers. We saw them before. Let's look at them again. What am I buying it for? 43.65. What am I selling? The 43.50s. What is it paying? Well, the 43.50 is paying 58. Now, if you do some quick math, 1% of 43.65, it's only 44 cents. That's it. I'm only looking to get 44 cents out of this deal. That's it, just 1%. That's it. Why is it so difficult for people to understand? 1% every single week is over 50% by the end of the year. And that I'm okay with. But what am I looking for? I'm looking for a good company, PayPal. Okay, the top, the bottom, here's the movement. That right there is telling me what's happening right here, right now. Let's zoom in. Last 30 days. That's it. Now you can see it even clearer. And it's the same 5 things I'm looking for. The high, the low, where was it, where is it, sideways, down, up. That's it. 30-day high, 30-day bottom, 1, 2, 3. That's what I'm looking for. Now, I got over 2,000 videos on YouTube over an 18-year period. I've been on YouTube since 2012. Someone gave me a camera and said, hey, there you go. So since 2012, I get over 2,000 videos, and you'll hear me say the same things over and over and over again. The top, the bottom, what happens? Goes up to the top. People say, oh, awesome, I'm going to take my profits. You start taking profits, the stock drops. At some point, and it happens every single company, at some point as she drops, holy cow, PayPal at 40 bucks, let's buy some. Now it's going back up again. That's what I'm looking for. And there it is right there with PayPal. So PayPal will be number 1 for today. Yay, PayPal. All right, let's do this. First thing I want to do, no, I don't want to do that. First thing I want to do is get rid of this. Change this to covered call. Now, covered call is a simple, easy trade. EV Charger, how you doing? Nice of you to show up. All right, so I'm looking for the 43.50. There it is, right there. Hold on, I'm going to show it to you. The 43.50. Now, you're going to need to take language lessons. For lack of better words, let's call it language lessons, because you're going to be doing something totally different than what you've done before. Because we're not looking for stocks that are going to do wild and crazy things. No, we're looking for simple, safe, predictable moves on companies that we know and like. 5 simple rules. It's not that difficult. So, I like PayPal. Fine. I'm going to buy it at this price. I'm going to sell it at this price. Now, when I say new language, well, there's a lot of terms you may not have heard of before, like covered call, strike price, expiration date, market maker, the spread between the bid and the ask, the volume, the open, the high, the low, the close, all that stuff. It's a new language. And yeah, if you're going to be investing your own money, which I suggest everybody learn how to invest their own money, you're going to need to be able to navigate through whatever trading platform you use. Now, this trading platform here, it's not mine. It's Charles Schwab's. Okay, it's called Think or Swim. You can download it for free, and you can use it for a while for free. Try it out. Now, I wrote a book about 15, 16, 17 years ago that choosing the right trading platform for your style of trading. Fine. This is the one that I like.
Squeeze that foot. Squeeze that foot.
I have no idea how the hell you got on my line. Delete that out of there. Squeeze the foot. What the hell does that mean? Anyway, so we're going to do a covered call, 43.50. Here's the price we're going to pay. Let's do this. Right there. I love this. It pops up, already telling me what I'm looking at. Now, I'm just going to show you one contract so you get a good idea of what it looks like, what it sounds like. You ready? One covered call, PayPal, PYPL, 18 June 26. That's this Thursday, 2 days away. The $43.50 call option. Now, remember the part where I said simple, safe, predictable? Simple, safe, predictable? Well, I know what my profit's going to be. I know what my investment's going to be. The only thing I don't know is what's the rate of return. if I put my money in here, but you got to remember, I'm doing this on a weekly basis. This trade that we're looking at right now is a 2-day trade, in, out by Thursday. That's what I'm looking for. So I don't know what the rate of return is. I'm going to need my calculator for that one. Yeah. My son was up today cleaning up my computer. And in doing so, I have no idea where anything is. There it is. Moving stuff around. There we go. Let's move this back up. Okay, there we go. All right, so profit 44, the investment, cost of the trade, including commissions and fees. Oh, before I go on any further, for those of you that are new here, have never been here before, this screen here is live on YouTube. So if you can't see these little tiny numbers here, go over to YouTube. Put it on your big screen TV. You got a big screen TV in the other room? Yeah. Plop yourself on the couch, grab yourself some popcorn, some soda, whatever you want to do. Watch the big screen. The numbers are easier to read. And it's being recorded. So I got to do this every night because somebody always asks, is this recorded? No, at this moment in time, it's not record. All right. It's not recorded. It is being recorded, if that makes sense. Okay. 9:49 p.m., the 16th of June, Eastern Standard Time. So, yeah, if I don't get to your question right away, don't think it's a recording. It's not. It's live at this moment. But if you're here on any other day, then the 16th of June, 9:49 p.m. Eastern Standard Time. Nin. Oh, thank you for that. That was nice. Thank you. It's being recorded. So you can go to YouTube and watch it later if you missed anything. WT Wit, what's happening? Nice to see you. Okay, let's find out the rate of return because this is something totally different. We're not investing for annual returns. We're investing for weekly returns. Every single week, I want 1%. That's over 50% by the end of the year. But people always ask me, if you're making 50% a year, how come you're not rich? Well, I am. But I don't use this money to grow. I use this money to live comfortably. So the money I make on a weekly basis actually pays my bills. Okay. I tried a TOS and wasn't granted access. Selling options with weekly expiration dates. Absolutely. Thanks for chiming in, Wesley. Sit tight for a second. All right, so here's my profit. Here's my investment. Let's see what the rate of return is going to be. Remember, this is weekly. It's not monthly, not annually. Every single week, 1%. So if I get 50 grand, I want at least $500 every single week. If I get 20 grand, I want at least $200 every single week. So whatever amount of money you have, 5,000, 10,000, 100,000, 300,000, a million, whatever you have, 1% a week. You're just moving that decimal point over two places. It's not that difficult. All right. So 44 is the profit. I'm going to put it into the calculator, 44. And then we're going to divide it by our investment, cost of the trade, including commissions and fees, 4306. What is my rate of return? 4306, 1% for 1 week. But ask yourself the question. Actually, it's not for 1 week, it's for 2 days, Wednesday and Thursday. That's it, 2 days. So let's change something for a second because 2 days is not really a lot. Although 1% is not bad for 2 days. Let's look at next Friday. Now, so let's get rid of this. We're going to edit. Okay? And we're going to do not 18 June, which is this Thursday. We're going to do next Friday, which is 26 June. So it changes the dynamics a little bit. Let's see what this looks like. Okay. Well, now I'm making $82 per share. So now $82 per contract. And it's costing me $4,200. Okay, still going to need that calculator. Okay, clear that. $82 divided by 42, 68. Well, now this rate of return is 2% for next Friday. So let's read it. You ready? One covered call, PayPal, 26 June. That's next Friday. The 43.50 call option. Well, the stock is at 43.92. So if I buy it at 43.92, sell it at 43.50, I'm still walking away with 82, which is still over 2%. Yeah, we're going to see this one because I can deal with 2% for 1 week. Well, not really 1 week. It's like a week and a half because we get the rest of this week. Okay, so while that's doing that, let's clear this out of here. 2%. There we go. All right, so here it is right here. Yeah, baby, look at that one. All right. One covered call, PayPal, PYPL, 26 June 26. That's interesting. 26 June 26. That's next Friday, the 26th of June. The $43.50 call option, which means I'm buying it and then selling it for less than what I paid for it and still walking away with 2%. Think about it. Buying it, selling it for less than what I paid for it, still walking away with a profit that comes at 2%. Now, 2% a week. Come on, 2% a week. I know it's not a lot. Okay, $82. $82 is not a lot of money, but $82 on a $4,200 investment is still 2%. Now, some of you might be thinking, I got to put up $4,200 to make 82. Hold on a second. Now, people don't bitch and moan when they spend $500,000 to buy a house and make $2,000 or $3,000 a week, $2,000-$3,000 a month. It's basically the same thing. But when you're doing a house, you're getting monthly cash flow, which comes to an annual return. This is weekly return. And I'm not buying the stock. I'm investing in a weekly cash producing asset. Totally different way of looking at it. It's kind of like buying a bubble gum machine. Put a penny in, a nickel and a dime in, and you get your gumball. Well, you buy the machine, cost you X amount of dollars, and you get X amount return on a weekly basis. Okay, sit tight. Mr. Bartender, sir, I'll get to that question in a second. I'm going to save this one at 2%. Why the hell not? First one of the evening. 2%. All right, I need to do this. That's good enough. That's yesterday. This is today. All right. Next. Let's get some of these questions out of the way. Questions. Okay. Kissable, nice to see you. Tan Guy, are you staying away from SpaceX? Of course I'm staying away from SpaceX for a bunch of reasons. Number one, a lot of people don't understand how it works. Because the people who got into SpaceX before it was a public offering, those are the people with a lot of money and they are able to do that. Okay? I think it's like every 30 days, they release a certain amount of stocks so the owners can unload it. And then, yeah, it shot up great, wonderful. But how do you trade something that's only been on the market for 2 days, 3 days? 3 days, it's been on the market for 3 days. There's no options. There's no profits, so why would I invest in it? You got to remember, I'm 62. I'm retired. I have no desire. Now, don't get me wrong. I'm not going against the man. Love the guy. Love what he's doing. But there's no profits in SpaceX at this moment in time. There won't be options available in who knows when. So why would I buy into something that's not creating cash flow? Now, I'm investing totally different than some of you people. I'm retired, so I don't have the luxury of being wrong. SpaceX started options today. Ooh, maybe I'll take a look at it. All right, next question. Let me get some more of these questions out of the way. What are you doing? Aaron, we're investing in dividend stocks for weekly cash flow. Thank you for your input there, Mr. Aaron. Appreciate it. All right. Hold on. Dvorky, what is the limit of the number of contracts you can sell? All right, Dvorky, you can sell as many contracts as you can financially afford to. Meaning, okay, if you're going to do covered calls, you got to buy the stocks first and then sell the options. But if you're just going to sell the options, it's called selling naked options. And you could do that, but you got to be approved to do it. And if you're financially able to do it, awesome. Thank you there. All right, SPCX. Let's take a look because I'm sure people are going to be asking me all night. SPCX. There you go. 3 days. Why the hell will you be putting your money? Now, I know why people putting their money into it, but why would I? It's a serious question. I'm retired. I want cash flow. This thing is 3 days old. And all the people who got in first, they have the first opportunity to get out and take their profits. Okay, so where are we? We're at 200. So the 200 is paying $10. $10 on a $200 stock. It's only 2%. So why would I risk jumping into a company that's only 3 days old? Now, you got to get some slack because the boy is doing some unbelievable things. And he's going to be doing some things quite a while. I got a lot of questions over there. Oh, I'm going to need my seat for this one. All right. Get my chair. Sit down. Get comfy. Answer some of these questions before we look at other stuff. All right. Well, I got those questions. What do we have over here? Over here. All right. All right, question. We did Marvel already. We did that. How do you pull up seasonal charts? Oh, Carrillo. You want me to see the seasonality? All right, that's an easy one. All right, seasonality is not that difficult. If you're looking at Think or Swim, for those who don't know what the seasonality chart is, it is basically looking at the seasons as opposed to anything else. Now, when you're on the chart, you want to go to style. Okay? So you click on the style right down here, chart mode. And there is your seasonality right there. So let me show you the seasonality for those of you who have never seen it before. And let me explain it to you briefly. Are you ready? Okay. It looks like not a normal chart because it's not a normal chart. All the way over to this side is January 1, the very first day of the year. All the way over here is December 31, the full year. So you're looking at a whole year. The blue line represents the movement this year. The blue dot is today, January 1st, today. Okay? The red line represents 10 years of movement. So it gives me an idea of what the stock normally does year after year based on 10 years worth of data. Now, I could change it right there, the little D. Okay, I can change it to 5 years, 1 day, 1 year, 1 day, 2 years, 3 years, 5 years, 10 years, 20 years. So what's the difference between the different years? Okay, so we're going to do 10 years. So that's the average movement over the last 10 years. Okay, hold on. Now we're going to do it again and look at the average movement over the last 20 years. A little bit different, not much. This hasn't changed any because this is this year. This is 20 years of average movement for the whole year from January 1st to December 31st. It tells you what the stock normally does. Normally drops in January, shoots up in March, drops all the way down, finds the bottom in June, jumps up a little bit in July, drops again in August, back up, back. So it gives you an idea of how the stock moves predictably. Okay? That's about it. Okay, so by looking at it, we can see where we are right now and what are we going to see for the next 3 or 4 weeks. Okay, here we are right here. Let me go this way. Here we are right here. This is today. Now, on average, she may dip a little bit more, but then look at this run up. Does not look lovely all the way into the middle of July. That's seasonality. It tells you how does the stock perform winter, spring, summer, fall. Okay, where's July 4th? July 4th is right here. Okay, so the stock goes up right up until July 4th. Okay. Anyway, I hope that helped out a little bit. Let's get back to where we were. I like 10 years. 10 years, 1 day. All right, so that's SpaceX. Next. And no, I'm not going to do SpaceX. It has 3 days. How do you have any type of anything in 3 days? Nice to see you, Miss Enza. Goofy boarding. Okay. Thank you there, Sweet Den. Double J, USOY. Yeah, we said no to that one already. We already did PayPal. Mr. Green, nice to see you. Tyson. Sarah, good evening, everyone. Joseph Mead, what chart service do you subscribe to? I don't. Okay. Now, Think or Swim, I get my charting information from Charles Schwab. And the other information that I get is right here from Yahoo Finance. And they're both free. I don't have to subscribe to either one of them. Hey, Mr. Fred, how you doing? Carasquilo. Okay, always Derek. Nice to see you. Tiffany, nice to see you. So BJ Plague wants to take a look at Visa. No, I like Visa. I do. And check a look. Okay, here we go. This is Visa for the last year. Okay, high, the low. Where was it? Where is it? Look at the motion. Down, up. Okay, we don't need to see all of this crap. We don't. There's the high of the year. Here's the bottom of the year. And this is where we are now. Simple. Down, now it's up. Great. Well, next step, the numbers. What do the numbers look like? If I'm buying it for $333, this week, 18 June, is this week, the 333s are going for $275. That's less than 1%. Fine. Hold up. Let's go to next week. Okay, so this week don't look that good. So next week, the 333s right there, $5. So yeah, it's over 1.5%. That works for me. So I want to zoom in and I want to see what does the last 30 days look like? What is the stock going to do next? Okay, so last 30 days. Okay, what do you think? Here's the top, the bottom. Where was it? Where is it? Look, up, down, up. Come on, it's easy to see. But what you're not seeing, you're probably seeing this right here. Ooh, that looks good. Hold on a second. Don't be so quick. What's that number? 310. What's this number? 333. That's $23. $23 from here to here. What is that, like 7%, 6%? Not a lot, but we still have more room to go. Okay, fine. Let's try this one, 333. Because I like Visa. Why the hell not, right? So, glasses, if you will. Covered call, there it is. The 333, 334, 335, okay, whatever, right there. One contract. Now, somebody asked me last night, why do you only do one contract? I don't. I only show you one contract because 1, 10, 100, they're easy numbers to multiply, add, and subtract. So it gives you a better idea of how you can incorporate it into your trading. What are we looking at here? Okay, I'll get to that in a minute. Hold on. Thank you, thank you, thank you, thank you. Okay, Brandon wants to know the difference. Do you understand all the different candles? Okay, Brandon, what kind of a question is that? No, don't get me wrong. Ooh, Illuminati. Thank you for that. All right, so let's take a look. One covered call Visa, 26 June. That's next Friday. The 332.50 call options. 386 is the profit. 32,000 is the investment. Let's get that calculator. What kind of rate of return is this? 386 profit. Remember, always start out with the profit. What is my profit? Okay. What is the cost of the trade, including commissions and fees? In this scenario, we're looking at 32,000 divide 32,864. That gives me a grand total of 1.1% for a week and a half. Okay, now if you really love Visa, maybe. I'm going to say no, only because if I get to wait a week and a half and I'm only getting 1.1%, let's save it for those of you who like Visa. All right, because it is over 1%. All right, let's get rid of this other stuff. We can go back to the next one. There we go. And there she is, Visa. Whoa, 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 whoa. Right there. Whoops, wrong one. One covered call Visa. 26 June 26. That's next Friday. Not this Friday, next Friday. The 332.50 call option. 386 is the profit. 32,864 is the investment for 1.1% for 1 week. Either you like it or you don't. Let's keep on going. Oh, let's save this one. 1.1. Oops. 1.1. That's 2. We need 3 more. So I saw a couple more questions. What do we got? Okay, Carilla, we did that already. Tears from the Sky. Interesting name. Brandon, nice to see you. Fry Daddy. Thank you, Fry Daddy. KDR and the Greeks. That's a new language. Absolutely. But here's the thing, KDR or CDR. I don't teach the Greeks. Now, the only reason I don't teach the Greeks is because it has nothing to do with what we're doing. And I know there are some people out there that say, what do you mean? They just know. See it fine here. Tyson, how you doing? Okay, we did SpaceX. Okay, all right. New Jersey, New York Motor. How you doing? Alan, what's happening, Alan? Okay, good evening, sir. Good evening, everyone. Way to go. All right. Whoa, that's weird. Thank you, Brandon. J. Edgar, that's funny. I think that's funny too. Northern California Green, how you doing? Bro got hacked. Okay, maybe. Weird you didn't accept his invite. No, I didn't. Chris, how you doing, Chris? JV, what's going on? Okay, Mr. Lee, how you doing? Mr. Bartender, sir, what happens if it goes below the strike price by 50 cents before that? Interesting question. Now, Mr. Bartender, sir, wants to know what happens when the stock drops. It's not an if. Okay, remember that, Mr. Bartender. It's not an if. It's always going to be a When. So let's pull back Visa for a second. Okay, take a very close look at what I'm about to do. Okay, you ready? Down, up, 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 down. I can do this all day long. Stocks do two things and only two things. They go up, they go down. When it goes down. See, I got 5 simple rules. And rule number 1 is something you really, I can't say really enough, really need to take into consideration. Rule number 1 is never buy anything you do not want to hold on to long term. Because what happens to stocks? They go up, they go down. They go up, they go down. They go up, they go down. And then they go up, they go down. That's all they do. You have to be able to buy something and say, you know what? I don't care what it does because it is consistently increasing its profits. It's one very, very important thing. I get 2 criteria for stuff that I buy, only 2. Consistent profitability and weekly options. That's it. If the company is consistently profitable for at least two decades, 20 years, 2 decades, and weekly options. That's the only criteria I have. 2 decades of consistent profits and weekly options. Because the stock is going to go up, it is going to go down, it is going to go up, and it is going to drop. So it's guaranteed. Guaranteed you're going to buy something and it's going to drop. On the flip side, you're going to buy something and it's going to go up. It's a 50-50 shot. So always, never, ever, 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 rule 1, never, ever, ever buy anything you do not want to hold long term. So to answer your question, it's not if the stock goes down, it's when the stocks go down. So let's take a look at this again. So if I'm buying at 335, very first thing I want to do is I want to sell the option 335, pick up whatever not this one. That's this week, 18 June. We don't want that one. We want this one right here, 26 June. So if I'm buying it at 335, I want to sell the 35, pick up $4. That's more than 1%. Great. When the stock goes down, I'm now selling 2 to 3 strikes out of the money. So I'm going to need to explain that one. So let's get rid of this. Get rid of this. We're going to open this up a little bit more so you have an idea of what we're doing. You ready? Here we go. So I'm going to do this right here. That's right there. All right. Nope. That one right there. Okay. So it's called in the money, at the money, out of the money, right? This is how it goes. This line right here that separates the black from the purple, the right from the left. Wait a minute. Right from the left. Okay. These are puts, these are calls. Okay, now I'm not going to explain the difference between puts and calls. We're only looking at call options because they're simpler, they're easier, and this is free. Okay, I'm not charging you anything, so it's free. It's a simple, easy strategy. We're using call options because they're easy to understand, easy to use. All right, so in the money, the stock is currently at 335. In the money would be 330, 325, 320, 317. That's in the money. Out of the money, 350. That's out of the money. The stock has to move up. All right. So ITM, that's that purple stuff, ITM. That's in the money because it has value. This value is already there. Hey, I'm in the money. Yay. Okay. Out of the money, means the stock has to go up or has to go down to be out of the money. Okay. Now, at the money, you could probably figure out, is smack dab on this line. It's exactly where 335 is, at the money. ATM, ITM only. So when the stocks go down, I'm selling out of the money call options. When I first buy a stock, very first, I want to do at the money or in the money because I want safety and predictability. When the stocks go down, I want to do 2 to 3 strikes out of the money to have the cash flow keep rolling in and keep collecting dividends. That's important for me. I want cash flow. That's what I'm looking for. I'm looking for cash flow on a weekly basis. Fine, works for me. So hopefully that answered your question. Next, what do we have next? SpaceX has options. Yes, I saw that. All right. Hope, Mr. Bartender, sir. Hopefully that worked out for you. Sylvia, how you doing? AJ Mama, thank you for that. Thank you, that AJ Mama. That was very nice of you. Brandon, 20,000 in options for $200 profit weekly. That's not what I said, Brandon. I said $20,000, 1% a week should be $200 a week. Okay, 1% on 20,000 should be $200 a week. Should be. Nothing's guaranteed. There's only 4 guarantees in life, and I can probably guarantee most of you know 2 of them. But there's 4 guarantees in life, and you probably already know 2. Thank you there, sweet Den. Steven, explain what you bought again. I didn't buy anything. I'm just showing you stuff. Good evening, AG Mama. Brad Hester, thank you, Brad. Oh, okay. BOD, how you doing today? All right, hold on. Rich Walter, thank you. Dvorky, what is the limit of the number of contracts you can buy or sell? None. There is no limit. It goes directly to the amount of money you have. How deep is your wallet? That's the limit. Okay? So take a look. 9,248,000 shares traded today. That's a lot. Just to give you a rough idea, get the calculator out. You ready? So, are you ready for this one? I don't think you're ready for this, but I'm going to give it to you anyway. All right, ready, Dvorky? Check this out. 9,248,000. So let's do this. Let's get rid of this. Let's put in these numbers, and let's see if you actually have this money to see if you can do this. Okay, 9,248,402 shares. That's how many shares traded today. 92 million. Now, how much is each share? $335. Multiplied by $335 comes to a grand total of $3 billion. Now, do you have $3 billion? Because if you have $3 billion, you could buy all the shares that traded today on this one company. Now, remember, there's 11,330, I forget what the number is. Anyway, there's over 11,300 different companies. This one company had $3 billion worth of shares traded today. So $3 billion worth of shares. Hold on, let's do this one more time. Let's divide this by 335, which would equal, okay? So it was $9 billion shares, $9 billion, which was 9,248,000 contracts. That's a lot. So you could do however much you can afford to do. I think that's probably the safe answer. Kissable wants to take a look at Macy's. All right, let's get rid of this. Back to there. All right, Macy's. So we're going to say Macy's. Hell no. Wasn't that quick? Did you see how quick that was? Seriously. It took me less than 2 seconds to say hell no. Why? Because I don't buy anything at the high. Macy's is at the high of the year. Yeah, no thank you. Next. It's actually that easy. Get used to saying next. Next. Sweet Dan, thank you for that. You showed PayPal covering 100 shares. Okay, moderate. I got it. Cade, thank you. CDR, we already did that one. All right, Stephen, Michael, thank you. Holistic Life, thank you. Oh, Carillo wants to take a look at AT&T. Ooh, interesting, but it's going to be a no. Now, not that I don't like it, but I'm so used to looking at charts, I can see within 2 to 3 seconds whether or not it's going to be a yes or a no. So let me tell you why it's a no. Here's the high of the year. Here's the low of the year. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down, up. What's going on right there? Let's zoom in a little closer and you'll see exactly what I just saw. Okay? 30-day high, 30-day bottom, went up. Now it's coming back down again. Monday was lower. Today was lower. Yeah. No, thank you. I only want to buy it as it's going up. Okay? The top, the bottom, shooing up, coming back down again. Sorry, no, don't get me wrong. I love AT&T. As a matter of fact, we're going to be keep our eye on AT&T. So as soon as she finds a new bottom, we'll take a look at it. Marty, hello. First time finding you. Cool beans, Marty. Yeah. I can't get that. Okay. Back down to aid. Thank you there, love. Naughty. Takes monthly options. Okay, thank you. Irish, thank you. Mac, thank you. Only one Ben. Look at power. PWR. Huh. That's going to be a no also. Okay. What am I missing? All right, right there. Okay. Now, the reason why this is going to be a no, same reason. Just take a quick gander at it right there. 30-day high, 30-day bottom, 1, 2, 3 days up. Now she's coming back down again. Sorry. It's actually that simple. Mr. Bartender, what happens when the stock drops? We already talked about that one. Okay, we got that one. Marty, how do you decide what stocks to sell covered calls? Ooh, that's a good question. Kyle, see you there. Cool beans. Okay, Marty, that's an awesome question. You ready? Marty, you're going to love this. You ready? Marty, dividend kings, dividend aristocrats, dividend champions. Brandon, thank you for that. Dividend contenders, and anything on Warren Buffett's list. So, how do I decide? You ready? You're going to love this, Marty. Check this out. Get rid of this. We're going to do that right there. And there's your answer. Take a look, Marty. Is that beautiful or what? Marty, it's already set up for me. It is called an EX dividend calendar, which means I can go in and put whatever list I want to put on there. These are dividend achievers. Any company that's increased their dividends, which means their profits, because remember what a dividend is. A dividend is a portion of the company's profits that they give back to us. So as an investor, I'm entitled, yes, I am, I'm entitled to a portion of the company's profits. Now, there's one little thing you got to keep in mind. There's two different types of companies, okay? And now, we looked earlier, there's 11,313 different companies. They're all doing the exact same thing. Do you know what that is? They're all trying to make more money this year than they did last year. That's it. They're all striving to be more profitable. They're not all doing it. As a matter of fact, these right here, these companies here have 10 years or more of increased profits. Not that I like that. I like 20 years of increased profits. Let's take a look at those. There you go. These companies here have 25 years increased profits. So, how do I figure out which ones, Marty? Check this out. Today is the 16th. I want to look at stocks that are having the dividends coming up in 2 weeks. Well, today's the 16th. Here you go, right here. Are you ready, Marty? Ready, Marty? Here we go. General Dynamics, Cardinal Health, Illinois Toolworks, Ben Franklin, Medtronics. If I'm looking at a company that's paying on a dividend in 2 weeks, I want to make sure, number one, the company's profitable. So every single company here has at least a quarter of a century. That's 25 years of increased profits. That's not just profits, Marty. That's higher profit. Year after year after year, higher and higher profits. Let me show you. McDonald's, Expedia, Stanley Black & Decker, ADP, Chubb Corporation, Abelmount, Kimberly-Clark, Pepsi, Lennar, Nordson, Medtronics, General Dynamics, Carbon Healthcare did that one, Cincinnati Financial, T. Rowe Price, Coca-Cola. Come on, we know most of these companies. Why would you buy anything else that you don't know of? Does it make sense? No, it doesn't make sense. Why would I buy a company such as SpaceX that has no historical performance and doesn't have weekly options? I only like companies that are consistently profitable. We all know who Pepsi is. We all know who McDonald's is. We all know who General Dynamics, Medtronic, you may not know them, T. Rowe Price, Coca-Cola, Stanley Black & Decker. We know those companies. Those are the ones that I like. That's how I decide which companies to buy. They are either consistently profitable or they are not. Okay, there's 11,313 different companies. I'm only looking at 350 of them because only 350 have been consistently profitable for more than 2 decades. That's how I figure out what I'm doing. Eduardo, ¿qué pasa, amigo? Alvin King, what's going on? Guerrillo, got it? Cool beans, cool beans. Clarax, good evening, Clarax. Marty, thank you for that, Marty. Alexander, okay, hold on. I just saw one, and I'm thinking to myself, hell no. All right, right there. Marty, did I do Micron? Hell no. Why would I do Micron? Marty, now I always tell people, rule number 1, never buy anything you do not understand. Micron, why would I buy anything at the high of the year and it's $1,000 a share? $1,000 a share. So to do one covered call on Micron, that's $100,000. I ain't putting 100 grand into anything. Daedalus, good evening. You Capricorn, thank you. All right, what else we got? Mark Johnson, thank you. SpaceX is monthly, got it. Victoria, nice to see you. Can you please do earnings instead of this? No. Now, user 273451514259. What the hell were your parents think when they named you? Seriously. So you want me to do earnings? I will do earnings if you can explain to me, if there are positive earnings and the company's making more money than they did last year, why does stock price go down? If the company does lousy earnings and everything looks crappy, why does the stock price go up? Earnings does not correlate with stocks moving. Not at all. I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. No, I don't do earnings. It's not as consistent as you would like to think it should be. It's not. Eric wants to take a look at ORC. Okay, wait. Brandon wants to take a look at the... can you explain how to read different candles? Why? Why would... All right, let's get out of this. Apparently, Brandon wants to take a look at the different candles. All right, simplify this. Are you ready? Hold on. Brandon, are you ready? This is called a line chart. Okay, we're looking now. Every chart we're looking for 5 numbers. Once you understand we're looking for 5 numbers, you'll understand how it progresses. All right. So you have a red line, you have a green line. Okay, the top is the high point of the day. The low is the low point of the day. That's the easy part. Green, which means the horizontal line on the left-hand side is the opening price of the day. The horizontal line on the right-hand side is the closing price of the day. And the distance between the top and the bottom is called the range. Open, close, high, low, range. That's what we're looking for. Now on a red line, same thing. The high, the low, the range, the open, the close. That's it. Now, let's look at the other candles. Are you ready? The other line chart. Oh. Now, these candles, same thing. Red, green. Okay? Line, line, line. Okay. The top, high of the day, low of the day. Now, the bottom horizontal line on a green candle is the opening price of the day. Top line on the candle is the closing price of the day. The top of the candle wick, bottom of the candle wick is the range. The red, same thing. The candlestick, the high, the low, the range. The top line of the red candle is the opening price. The bottom line on the candle is the closing price. That's it. What else do we have? My glasses for this one. It's 5 feet away, but I still need my glasses. The only thing next is the line chart. Let's say you get the candles and you get the line chart. Okay? Green's going up, red's going down. Green's going up, red's going down, green's going up. It's elementary stuff. Why are we looking at this? Let's get back to where we were. Candle trend. There we go. Now, let's get back to where we were. Eric wants to take a look at Oracle. ORCL, Oracle. ORCL. Way to go, Mr. Eric. What do we got? Ooh, check that out. Quick look. It should take you 3 to 4 seconds. The top, the bottom. Where was it? Where is it? Look, it's up, down, up, down. What's going on right there? Let's zoom in before we do. 188.33. The 187.50s are going for 365 for 2 days. Hell yeah. All right, last 30 days. What do you think? Let's go this way. 30 days ago, we dropped, shot up, back down, back up. Look at that right there. I like 2 days to the upside, 1, 2. Today is day number 3, but it pulled back. Okay, 30-day bottom, 1 day up, 2 days up. We looked at this one this morning, and I said, I'm only going to jump in if she goes above that line right. And she did. She went right up to there, but she didn't create a new high. Okay, so let's take a look at Oracle. Covered call. Right there. The 187.50s, there it is. One contract. There it is. Confirm and send. Let's take a gander. One covered call, Oracle, 18 June, which is this Friday, so this Thursday, 2 days away. 187.50. 330 is the profit. 18,000 is the investment. What is the rate of return? What am I getting for this little endeavor? Profit 330. The cost of the trade, including commissions and fees, 18,420. 18,420. 1.8 for 2 days. Imagine that. 1.8 for 2 days. Let's see what it looks like for next Friday. Okay, so we're going to change, we're going to edit right here. We're going to edit this. And then we're going to change 18 June. It says expiration, EXP expiration. We're going to change 18 June to 26. Look at this. 18 June, 26 June, 2 July, 10 July, 17 July, 24 July, 31 July. 1, 2, 3, 4, 5. 5 weeks in July. 5 means I can get 5% or more for just July. Do I do private training? Of course I do. Justin, DM me your number. DM. Don't put it on the screen. Just go to the top left corner of your screen, click on that. They'll take you to the bio. The bio will take you to the email. DM me your number. I'll give you a buzz. Or just go to the website and book a call. We'll chat. So every single week, I have an opportunity here. But I want to take a look at next week, 26 June. So 26 June, let's read it again. Are you ready? One covered call, Oracle, 26 June. That's next Friday, 187.50. Nothing changed except for the expiration date. Okay? Well, that gave me more money and less investment. Why not? Let's take a look at the numbers. Are you ready? Okay, 642 is the profit, right? Max profit, 642. What's my investment? 18,108. Divide 18,108. Grand total of 3.5% for a week and a half. For next Friday. 3 point. Yeah, we're going to save this one, of course. Of course. All right, while we're waiting for that to load, let's clean up my board. Get rid of that, get rid of that, change that to that, get that back to there, and there we go. All right, here it is. Oracle 3.5. There we go. One covered call, ORCL. Oracle, ORCL. 26 June 26. Where the hell is the month going? The 26th of June is next Friday. 187.50, 642, 18,000 for 3.5% for 1.5 weeks. If that makes sense. Hold on. All right, so we're going to save this one. 3.5. Why the hell not? That makes number 3, which means we have 2 more to go. 3.5. Next, let's sit down and answer some questions. What would be your ROI you're looking for? 1%. Mark, you got to be new here, okay? Because I'm saying it like every 15 minutes. I'm looking for 1% every single week. 1% every week is over 50% by the end of the year. What are we looking for? All right, Illuminati, thank you for that. C-Train. Mark A. Johnson, what would be your ROI you're looking for? 1%. Okay. Brandon, thank you. Ooh, DJ Flawless wants to take a look at Wally World. WMT. Ooh, no. Now, Brent. Oh, wait a minute. Who's looking for Wally World? DJ. Now, DJ, don't get me wrong. We did Wally World last 2-3 weeks ago. So you look at, there's that bottom. Remember that big drop a couple of weeks ago? The big drop. Okay, hold on. Let me zoom in a little bit closer to get a better idea. Okay. Okay, DJ, you ready? Here's your top, that big drop. Okay, she went down, 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 went back up. See, now I jumped in right about here. Okay, I'm not going to bullshit you and say, yeah, I bought at the bottom. No, I didn't buy at the bottom. I never, ever, ever, ever buy at the bottom. I look for the bottom right here. Then I look for 2 days to the upside, 1, 2. And on the third day, if it goes higher, that's where I'll jump in. So, yeah, I jumped in right there, and I got out right there. I'm only looking for 1%. So I got in, I got out. Now, you could jump back in because you get the high here. She drops. Now she's coming up slow and steady. The 121s are going for 140. I don't want to look at this week. I want to look at next week. Okay. So next week, the 26th of June, the 121s are going for 204, which is more than 1.5%. So let's do Wally World. All right. Wally World. All right, let's get out of there. Covered call right there. The 121 is going to need glasses for this. Don't get old. Okay, you may think it's fun being in your golden years. It's not. Now, don't get me wrong, because I get to go wherever I want, get to do whatever I want, but my body is falling apart. It is. I wake up with pain. It's like, where the hell did that come from? You ever get a shooting pain and wakes you up in the middle of the night like a leg cramp in the middle of the night sleeping? It's like, whoa, what the hell is that? All right, so here you go, Wally World. Let's do just one contract, not 10. One makes more sense for a lot of people. That way you can understand what the numbers look like. Here they are. You ready? Wally World, 26 June, which is next Friday. The 121 call option, 208, 11,000 is the investment. Let's take a look at the numbers, because numbers don't lie. Where the hell did my... There it is. Get rid of that. 208's the profit. Remember, profit. Remember the part where I said simple, safe, predictable? Simple, safe, predictable. I know what my profit is before I even do this, because I can say no or I can say yes. Okay. So I want to know what my profit is. I want to know what my commitment is. And is the rate of return going to be worth my while? Well, it's Walmart. So Walmart, it's never a question for me, because a Walmart is, I think they're a dividend aristocrat. 25 years increased profits. Fine. Okay. 208 profit. 208. And we're going to divide that by my investment. 11,892. 11,892 gives me a grand total of 1.74. So, no, 1.75. Okay. That works. 1.75. That's 1 3/4 for those of you who, because some people just don't pay attention to that. Okay. Anyway, Wally World, number 4 means you got one more to go. All right, let's get rid of this. Get rid of that. Change that back to this. Go back to there, and we're ready for the next one. Here we go. Wally World. Whoa, too big. Right there. One covered call, Walmart, WMT, 26 June. That's next Friday. 121 call option. Who do we have? Hey, Lucky, dude, really, Lucky? Where it's 11:15, Lucky. 208's the profit. 11,892 for 1.75 for one week. Okay, fine. 1.75. Whoops. $1.75. Okay. We got one more to go. Let's get to some of these questions before we got more time to go. What do we have? Ow! Ow! I'm getting old. Sciatica in my... Oh, what the hell is that all about? Uh-oh. Wally World, DJ Flawless, nice going. Tap on clip to paste it in the text box. Uh-oh. You're going to have to give me a call on that one and walk me through that. That makes no sense. Love, can you explain the math, please? Uh-oh. Math. She wants me to explain the math. The math. I'm going to see if I can make it as easy as possible, love. Are you ready? Sit tight for a second. She wants me to explain the math. All right. Are you ready? The math goes something like this. Number 1, the stock price, 121. 121.03. Okay? That's the current stock price, 121.03. 1% is what I'm looking for. 1% of 121 is 121. That's the math. Okay? Stock price 121. I'm going to sell the 121s, and the 121s are going to pay me $2.04. Now, is $2.04 higher than 121? Yes, it is. So that is more than 1%. That's as simple as I can possibly get it. Okay? So let me see if I can break it down really quick. All right? Ready, love? Stock price, 121.03. Move the strike, move the decimal point over 2 places, 121. Okay? The 121 strike price is selling for 204. 204 is higher than 121, so it's more than 1%. There's your math. Simple as possible. All right, let's take a look at questions over on the other TikTok channel. All right. Hello. Apple cheeks. Backwards, Jim? Yep. All right, so who do we have over here? All right, over here. We have Jose. Alex, Cesar, Michael. Screen share isn't coming through. Yeah, all right. Peter Mac, J Zip, Hokey. E-shares blocking. I've got that one. Rich Canyon, thank you. Emmanuel, thank you. Thank you. KJ. Lord V. Okay, I want to learn call options. That's what we're doing. Brian Siegel. Yo, what's up? Yo. Wow, gone. I have no idea what that means, but all right. Options, of course. Wesley, thank you. I tried Thinkorswim and wasn't granted access. Can't help you out with that one. Selling options with weekly expiration dates? Absolutely. Have to own 100 shares? Absolutely. You would only do this in a company you already want to invest long term? Absolutely. Would you only do this in a company you want? You can't ask me the same question 3 times, dude. Okay. Rich wants to take a look at XYZ. Really? XYZ, you say, huh? XYZ. Oh, hell no. No, the reason why I'm saying no to XYZ, she shot up, came back down, one gap up from 66 to 76 is $10. That's 12%. Yeah, no. SpaceX started options today. Buy everywhere. Thank you. Rob, monthly, got it. Uzi, Kimberly Clark gave me a good return for 6.8, 105. Bought on 529. Okay, let's take a look. Kimberly Clark. Love Kimberly Clark. Dividend King. KMB. Oh, hell no. Now, don't get me wrong. I love Kimberly Clark. I really, really do. Okay? But here's the thing. Here's your bottom. Here's your top. I don't buy anything at the high. Sorry. Yeah, good lesson today. Thank you, Wesley. And Gennaro, appreciate all this. I'm going to check out your YouTube. Ooh, yeah, have fun with that one. There's a lot of videos on that one. Wesley, yeah, I learned a lesson today. Seasonality is like wheat, corn, etc. No, seasonality is like winter, spring, summer, fall, Christmas, Thanksgiving, Easter, New Year's, any major holiday. It's always interesting how each major holiday affects stocks differently. That's one of the great things about seasonality. Wesley wants to take a look at IREN. IREN. I-R-E-N. I-R-E-N. No, you missed your opportunity with that one. Okay, see, you missed it. Down, up, down, up. Now she's coming back down again. If you like it, just keep your eye on it. As soon as she comes down to the bottom, turns around, goes back up, that's when you jump in. Okay? Univision, hello. Rich Sims, Is there a way to filter a list on the brokerage to make a similar calendar or watch list? It depends on which brokerage you're using. I'm using Thinkorswim, which is through Charles Schwab. Now, I don't use Charles Schwab's platform because I don't like it, because I got to go back and forth from one screen to the next, to the next, to the next. So I look at the chart. Oh, that looks great. Then I go look at the trade. Oh, wait a minute. What that chart look like again? Then I got to go back and back and forth. No, I like everything on one page. Makes it easier for me. Mervo wants to take a look at Comcast. CMCSA. I think I have some of these. And yeah, I'm bumming on this one too. But here's the thing with Comcast. Comcast incorporated in 1964. They have over 60 million different customers paying them every single month. So, high, low, where was it? Where is it? Look, it's down, up, down. What's going on there? Let's zoom in. Now, yeah, I do have some of these, and yeah, I'm a little unhappy with it. Okay. 30-day high, 30-day bottom. Look, it moved up nicely. Now it's coming back down again. Okay, here's your bottom. 1, 2 days up. There's day number 3. Right there. Jump out. Now it's coming back down again. So no for Comcast this week. What does the 200-day moving average mean? It means how is the stock moving based on the last 200 days? So you have today, and then you have 199 other days. How is the stock moving as compared to those 200 days, the moving average? That's basically what it means. Okay, done with all those questions. Wow, that was quick. I figured there'd be a lot more. Max Trader. Okay, sweet Dan, how did this guy get by you? Okay, I shouldn't have to do this. You should have done this already. There we go. Get rid of him. Squirrel Boy. Oh, Uber. Milo the Trader wants to take a look at Uber. You do know that Uber has not been around for 20 years yet, and it's not going to fit what I'm doing. But look what's happening with Uber right there. Top, bottom, is, up, down, up. Maybe, if you like Uber. I don't, because it hasn't been around long enough. But that's me. All right? 30 days ago. Here's your bottom. There's your top. 73.25. The 73s are going for 174. That's over 2% if you like Uber. If you like Uber. Uber. So, let's check it out. Now, granted, I wouldn't do this, but if you want to do it, hey, that's a you thing. So, let's change this. Covered call. The 74s right there. One contract. Here's what Uber should sound like. One covered call, Uber, 26 June, that's next Friday. The 74 call option is paying $207. It's only a $7,000 investment. The numbers sound good. Calculator, if you would, please. 207 is the profit. And we're going to divide it by the investment, which is the cost of the trade, including commissions and fees. So that's going to come to a grand total of $7,193. And that's going to give me 2.8. 2.8% for 1 week. If you like Uber. You can't forget that last question. If you like Uber. Remember, you're putting your money into whatever companies you like. You feel it works for you. I don't give tips. I don't give advice. Okay, the advice I give is don't stick your head out too far. It might go home in another car. That's the kind of advice I give. I don't give stock tips. I'm just relaying what you're asking me to look at. So Uber, current price, $72.25, but it's paying 2.9% for 1 week. If you like the company, remember, never buy anything you don't intend to hold long term. If somebody offers you more than you paid for it, so if I'm paying $73.25 and then I sell a covered call at 74 and somebody wants to give me 74, yeah, I'll take it. Profit's profit, no matter which way you look at it. Two things you want to keep in mind. One, it's not a profit until you take it. Just because a stock goes up and you own it, it's not a profit until you take it. Nobody ever went broke taking profits. That's it. It's not a profit till you take it. Nobody ever went broke taking profits. Okay, 2.8, Uber. And that will be number 5 for the day. And we only do 5 a day. It's not like a vitamin. It's like a vitamin for your money. 5 a day. All right, let's get rid of this first. Get rid of that. Get rid of that. Get this back to where we were. Get that back to where we were. And here's Johnny. Johnny, tell him what he's won. All right, Bill, today we have Nope. Nope, that ain't it. There we go. 1 covered call, Uber, U-B-E-R, Uber, 26 June, which is next Friday. Whether you like it or not, whether you agree with me or not, you got no choice. My children hate this. You got no choice in the matter. Sorry. That's what I tell my son. My son hates it when I say that. You got no choice. You're my son. You're the oldest. You're responsible. Too bad. So sad. So you have no choice in the matter. Next Friday's coming, whether you like it or not. Next Friday's coming, the 26th. It's 10 days away. It's coming, whether you like it or not. What are you going to do about it? Are you going to make an investment into your future, or are you not? What are you going to do? 207 is the profit, 7,100. Let's call it 72, 71.93. That's 72 for, what was it again? I tell people this all the time. 2.9. 2.9%. Why not? 2.9 for 1 week. Look at what we got. 2%, 1.1, 3.5, 1.75, 2. Look what we got. Yesterday, 4.1, 4.4, 4.6, 5.1 yesterday. Why didn't we get anything like that today? Let's answer some questions before the night's over. We're going to answer some questions. I'm going to call it a day. Uh-oh, got a low battery. There's nobody even there. Okay, questions. Okay, we did Uber. Squirrel Boy, thank you for that. Just checking in. All right, Steve-O, Big Daddy Surprise. Melody. Well, that's an interesting way of spelling that, Melody. Vintage Mike. GD Dag Host. Okay, Wesley, we already did Iron. Mark Moya, how you doing? Skywater. Okay. Sarah. Good evening there, Miss Sarah. Donald Hawks. Good evening. Wesley, do you recommend a funded account? Okay, I'm kind of curious. How are you supposed to make a profit unless you fund your account? Funky Cold, which one of your books explains your strategy for a beginner like me? Ooh, that's a good question. The simplest and easy book is always the book number 1. It explains how dividend capturing works. Gives you a little bit of history of the stock market. Sarah wants me to go slow. Hey, Sarah, it's recorded. It's being recorded. So you can go back to YouTube and watch it over again. Every day we do the same thing. And every day it's recorded over and over and over again. Skywater, thank you. Stocks and Dops. Terry wants to take a look at Ford. Ford, you say, Mr. Terry. Now, I did buy some Ford yesterday. Or was it? Wait, what's today? That's weird. What's today? Today, Tuesday? Yeah, today's Tuesday. All right, so here's Ford. All right. You get your top here, stock drops. What's going on there? Let's gander. Dropping still. Okay? For Ford. Coles, you say, Terry. Okay. Same thing, Terry. Take a look at the last 30 days. Okay, nice run up, but now it's coming down. Sweet Dan. James will repeat his strategy every time he's in on. It takes a while to learn. Okay, Skywater, MSTR puts. Why do you want MSTR? That blows my mind. And why would you want to do puts on that? Seriously, look at where it is. CHTR. What the hell is that? CHTR. Charter? Charter Communications. Ooh, interesting. Oh, prove that I'm human. I'm not human. There we go. All right. There you go. Okay, so stocks and drops. Okay, that's an interesting chart. Take a look. Here's your top, 425. Your bottom, 125. Ouch. It's a $300 drop. $400 drops $300, and you want me to jump in? But if you like it, take a look at that right there. Let's take a gander. Last 30 days. Okay, it's going to be a no for me. Here's your 30-day high, 30-day bottom. There's the movement that you're looking for. Now she's dropping again. You missed the opportunity. Sorry. Mark, if you started with, say, 100,000, how would you calculate your compounding annually on your method? Ooh, I like this one. All right, I'm going to show you something. Mark Johnson, you ready? Okay, Mark Johnson, here we go. We're going to go to my website, okay? The10MinuteTrader.com. Okay, you can check it out. Do your research. I've had it for over 15 years. Okay, now I want to go to right here, the little hamburger. Okay, click on that. What I'm looking for here, Mark Johnson, is weekly compound interest calculator. You ready? Put that right there. Lo and behold, tra-la-la, there it is. Weekly compound interest calculator. Now, I created this myself because it just didn't exist before. So you say 100 grand. All right, let's do this. All right, 100 grand. That right? 1, 2. Yep. Okay. Now there is an opportunity for you to make periodic deposits. So let's say every once in a while you want to throw in $100, $1,000, whatever. You can do it on a weekly or a monthly basis. I'm not going to count that. I'm just put that on a zero. Just see what 1% per week looks like, starting out with just $100,000. Okay. Then we're looking at the interest rate. Okay. I'm showing you at this moment how to make 1% every week. So we're going to put 1% right there. Okay, next. Well, you don't want to put, if you want to put more money in, deposit frequency, you can put money in on a weekly basis, monthly basis, or bi-monthly basis. Okay, weekly, bi-weekly, or monthly. Okay, we're not going to do that, but we're going to look at just time frame, 1 year. Okay, just 1 year. You ready? Mark, you ready? Okay, so let's recap. $100,000, 1% weekly for 1 year. Then we're going to hit compute savings. You ready? I'm thinking it's going to be around 64, 65, somewhere in that area. 67. Okay, so it's $67,000 at 1% per week on $100,000. See that, Mark? To figure that out, you take whatever number you start out with. I know someone's thinking this. Well, how do you figure that out? You take whatever number you start out with, and you multiply it by 1.01. Then you multiply that by 1.01, and you multiply that by 1.01. You do that 52 times, that's 52 weeks. Any number you multiply by itself is going to be that number. The 0.01 is the 1%. So the number multiplied by 1.01 equals, multiply 1.01 equals, multiply 1.01 equals 52 times. You're coming out with a $67,000 at 1% a week, starting out with 100 grand. Hypothetically speaking, if you do it correctly and you follow the instructions. Now, as you saw this evening, okay, as you saw this evening, let's make this bigger. Okay, we don't get 1% all the time. 2.9. Whoa, whoa. 2.9. 1.7. Whoa, that. Okay. I did something wrong. Anyway. 2.9, 3.5, 4.1, 5.1, 3.5, 1.1. I don't get 1% on every single trade, even though that's my goal. Sometimes I make more, sometimes I make less. That make sense, Mr. Mark? Sarah Skywater, the quarterly chart on M looks nice. Okay, but we already looked at Macy's. And Macy's didn't really look that good this week. Okay, Macy's doesn't look this good. Okay, check it out. The high, the low, where was it? Where is it? Look at this. Up, down, up. It's at the high of the year. Why would I want to buy anything at the high of the year? It's no. Okay, stocks and charts, we already looked at that one. Show us yes. I just showed you 5 of them. Teddy, Aqua. What the hell is Aqua, Teddy? Aqua? Really? What the hell is that? AQUA. Sorry, if it's not coming up, it's a no right off the top. KJ, thank you for that. Brandon, thank you that, Brandon. That was very nice of you. Wesley, thank you. Marty. So just dividend stocks that are in an upswing, pretty simple. Kind of simple, Marty. I'm looking for companies that are consistently profitable year after year. Hold on a second, Marty. I want to show you something because I'm surprised nobody asked me this today. So, Marty, you ready? Now, this company right here, you know who it is. It's Microsoft. We want to take a look at the 20 years of the dividends. Now, you got 2 choices, Marty. Okay, choice number 1, which some people actually enjoy it. I don't. It would drive me freaking nuts. Choice number 1 is you can read 20 years of quarterly reports to see how the company's doing. Or you could go directly to the dividends because the dividend is a portion of the company's profits that they give back to the investors. And that's us. We're the investors. We buy the stock. We are entitled to a portion of the profits. Okay? So take a look, Marty. Are you ready? 2006. The dividend from Microsoft was 9. Okay? 2007, it was 10. 2008, it was 11. 2009, 13. 16, 20, 23, 28, 31, 36, 39. Do you notice it's going higher and higher every year? Okay, 42, 46, 51, 56, 62, 68, 75, 83, 91. Every single year, higher, 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 higher profits for 2 decades. Microsoft, 2 decades increasing their profits. Only about 350 companies have increased their profits consistently. Okay? Brandon, Coca-Cola, you say, huh? Coca-Cola has over 7 decades of increased profits. Can you imagine that? And no, for Coca-Cola, the high was last week, now it dropped. Well, you don't believe me? Take a look. Okay? High was last week, now it's dropping. No to Coca-Cola for this week. No Coke for you. All right? You have to own 100 shares in order to sell a contract, though, right? Yes and no. Marty, understood, thank you. Dvorky, is the calendar on Thinkorswim? Yes, it is. Nope. Okay, Funky Comadina. Which of your books should I, okay, yeah, usually book number 1. It starts you off. Book number 3 is the one that kind of explains this strategy. But book number 1 is always a good one to start out with. You have to own the stock 2 weeks before. No. In order to collect the dividend, you own the stock 1 day before the EX date. Let's go back to that for a second. Okay. Jeff, the EX dividend date, the EX dividend calendar, okay, that's this thing right here, was originally created so people know when the stocks are paying their dividends. So if, hypothetically speaking, you want to get the dividend from General Dynamics, there's 4 dates to remember. Okay, date number 1 is called the announcement date, right here, announcement date. That's when the company comes out and say, good afternoon, everybody. We made this much money. This is how you're going to get yours. This is when you're going to get yours. This is how we can do next year. Blah, 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 blah. It's the announcement date. It's just telling you what you're doing. Date number 2 is the important date. That is called the EX dividend date. If you want to collect the dividend for General Dynamics, which is on the 2nd of July, you have to buy the stock before the 2nd of July, which would be the 1st, the 30th, the 18th, the 9th, the 12th, the 1st, the 3rd, the 15th, any date before this date. Date number 3, date of record. Whoever owns the stock on the date of record is entitled to the dividend. If the dividend increases, means the company's making money. If the dividend decreases, that means the company is making money, but not as much. It means they're losing money. Okay? Date number 4, simple. It's when you get your money. Okay? The announcement date tells you what's going on. The dividend date, the EX dividend date, if you want the dividend, you're going to buy it before this date. Date of record, whoever owns the stock on the date of record is entitled to the dividend. Payment date. That's it. 4 dates. Camaro, how are you today? Good Doctor 888. Good evening. Usually already priced in weeks ahead. No, not really. But thank you for that. Brandon, yes, I would. I'm ready. Cool beans. Mary, good evening. MC, how are you doing? Brandon Odell. Optics are good. M8, thank you. Understandably easy enough. Well, it was. See, the funny thing is, people ask me all the time. I said, I created this strategy for my 9-year-old daughter. My 9-year-old daughter said, Daddy, what are you doing? Can you teach me? So when 9-year-old daughter asked me if I could teach her, this is what I came up with. Simple, safe, predictable, consistent, no way to lose. Shooting star candlestick. Yeah, I'm not even going to bother with that one. Ella, good evening. Jemana. Oh, Brandon. Yes, we already did those. Doji. Yep. No, we didn't do the Doji, but okay. David, thank you for that. No. Uh-oh. David, why are you saying no? Or we're not going to look at it anymore because, we're past 11, and I usually go from 9 to 11. Jason, I'm sure you have been asked this question already, but I'm just coming on. Thoughts on SpaceX? My thoughts on SpaceX is congratulations to Mr. Musk. He's doing a wonderful job. Lovely, lovely, lovely. not something I'm going to buy. Okay? Now, maybe in 2 or 3, 4 years, when the options are weekly, maybe I will. But until then, no. Arbin Rana. Okay, what does the World Cup have to do with investing in dividend stocks? Bruno, thank you. Ooh, Mr. Duong wants to take a look at the gap. Now, don't get me wrong, I like the gap. Let's go see what's going on. Because I always say if I'm over, all right, there you go. Gap. Oops, wait. Trade, gap. Here we go. G8B, the gap. Interesting. Okay, what are we looking for? Are you ready, Mr. Duong? Okay, the high, the low, where was it? Where is it? Look at this. Up, down, up. What's going on right there? Last 30 days. What do you think? Up, down. Now she's going up, but today she dropped. So it automatically takes it out of the running once it drops. Stefan. Oracle is 187.85. 100 shares is 18,000. It is down 2.2% today. Okay. Question. Do you like the company? You either like the company or you don't like the company. If you like the company and you want to buy it, hey, that's a you thing. You don't like it, you don't want to buy it, fine. Can you do one of your stocks from the calendar, please? Why? Why? Oops, wrong one. Okay, you ready? Here's the calendar. Cincinnati Finance. No, Medtronics, MDT. You ready? Medtronics, MDT. MDT. The top, the bottom, where was it? Where is it? Up, down, up. There you go. There's your answer right there. Last 30 days. There you go. Up, down, up, down, up. There's your 2 days to the upside right there. 30-day bottom, 30-day top, profit taking. 1 day up, 2 days up, 81.32. The 81s are going for 135. That's 1.5%. Right there. Joey Designs. I have $10,000. How fast does it take to double? That would depend on what you're doing. Okay, you can take it and fold it in half. There you go, doubled. Say, Joey, you're looking to double your money really quickly. You're in the wrong place, dude. It's not the kind of stuff I do. What I'm doing here, Joey, it's slow, it's boring, it's monotonous, it's tedious, it's crappy. And we're looking for 1% a week. Okay, 1% a week, you're looking at least 2 years to double. At least. Eddie, good evening. Zohir, good evening. Len, busy. What's going on? All right. I think we're basically done. Okay. Inder Singh, we already looked at SpaceX 8 times today. That sucks, doesn't it? Yes, it does. How long have you been using this method? Since 2008. When my 9-year-old daughter says, Daddy, can you teach me? Okay, so I had to come up with a trading strategy specifically designed for a 9-year-old little girl. Hold on a minute. Before we go much further, give me a dime so I can phone my mother. All right, sit tight. I'm going to introduce you to the princess. Videos right there. Oldest videos. Here she is right there.
Hi, I'm Jason, and as being part of my internet lifestyle company, which my dad doesn't let me go on that. That's what I do. Being part of that, you're going to be getting weekly lists of stocks and tricks.
And there's me. Okay. It's my favorite part. Okay. Okay. So my 9-year-old daughter wanted to learn. Fine, not a problem. So I had to make it fun and exciting for her. How else do you make it fun and exciting? There you go. So yeah, this video was done before. See what's behind me? Hey, January, February, March, April, May, June, July. Yeah. EX dividend calendar. I had to create my own. What was that, like 15, 18 years ago? Quite a while ago. So, yeah. Okay. Okay. All righty. One there, and confirm, and there. Okay. Vlad, how you doing today? BJ wants to take a look at BDX. All right, let's get out of this. Just this gives you an idea of where it came from. My 9-year-old daughter said, Daddy, can you teach me? Okay, fine. BDX, you say? BDX. Why are we looking at BDX? Hell no. Come on, dude. I don't do monthlies. No, 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 no. S. Looper. Spanky wants to take a look at HIMS. HIMS. Ooh, take a look at that, Spanky. The bottom of the year. Now she's slowly going up. Nice. Red, white, and blue. Gotta love it. Is he drunk? No. I'm a terrible drunk. I quit drinking when I was 17. I wasn't very good at it. Outside of Robinhood, what platforms do you use to place trades if not Schwab? That's it. Schwab and Robinhood. That's it. I only get 2 trading platforms. I got 7 different accounts, but Robinhood and Schwab are the only ones I do. What time frame is that you're using? 1 year. Okay, so Uptown Rich. I look at the 1-year chart first, then I look at the 90-day chart, then I look at the 30-day chart. Okay, 1 year, 90-day, 30-day. Now the 90-day, the 30-day chart, it's at the high of the year. Yeah, no, thank you. Not the high of the 90-day, 30-day period. And I think we're done with questions. Oh, XEL is monthly. Yeah, that would be a no. Do you do this full time? No, Mark. Why? I tell Mark, 5 or 10 minutes a day. That's it. What did I buy? What did I sell? Where is it? Where's it going? What should I do? 5 questions. What did I buy? Where is it? All right, I'll give you an example. Well, let's take a look at HIMS. Okay. If I was going to do HIMS, what did I buy? 31.47. What did I sell? 31.50. 31.50. Okay. What did I collect? 171. That's way more than 1%. Great. Where is it? Well, it's at the high of the 30-day period. Where does it look like it's going? It looks like it's going up. What should I do next? Nothing. That's it. If I buy it, 31.47, I'm going to sell somebody the rights to buy it from me at a certain price by a certain date. It's simple. Okay? 31.47. Sell it for 31.50. Anytime between now and expiration, which is 26 June, which is next Friday. So whoever buys this from me is paying me $1.72 per share, just under 2% for 1 week. So I buy a company that I like, which I already have HIMS. Okay. I sell for the same price I pay for it. If someone gives me 31.50, fine. I'll take it. Profit's profit, no matter which way you look at it. Because if I catch the 1% profit this week, okay, when that stock drops, now what do I mean by when it drops? They all do. They all do. All do. Okay? Down, up, 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 down, up. They all do. They go up, they go down. I jump in when I jump in, I take a look at the bottom, 2 days up. On the 3rd day, I will jump my 1%. I'm out. Then I look for another bottom. I jump back in. 2 days up, I jump in. Once it hits 1%, I'm out. Every single company I look at As of this week, there's 11,313 different companies to invest in. How do you decide? Well, I decide by, is the company profitable? They're either yes or they are no. Okay, you get the Dividend Kings, 5 decades, a half a century, 50 years increased profits. Why wouldn't you want one of those? List number 2, Dividend Aristocrats, 25 years increased profits. Dividend Champions, 25 years increased profit. Different rules between the champions and the aristocrats, but still 25 years increased profits. Dividend Contenders, 10 to 24 years increased profits. You either like the company or you don't. Okay, 007 Goku wants to take a look at BO after he insults me. Okay, we'll take a look at BO. BO, what the hell does that mean? What the hell is that? No, thank you. Do you even trade? Of course I do. Maya Mantine. Okay. All right. Life been tough. Okay. Okay. Andrew just realized they deleted my post. He's a scam artist. Thank you there, Andrew. I appreciate the comment. Let's do this. Nope, that's not what I want to do. That's not what I want to do. I want to do this. Reply. Reply to Mr. Andrew. If you don't mind, please explain how I'm a scam artist. I'm not trying to sell anything. There you go. I'll give that to him. He can figure it out himself. All right. He's selling 60% returns while most investors can't beat 8%. That's not my problem. You can't beat 8%. Okay, where are we? Okay, hold on. Ooh, Mr. Andrew has quite a lot to say. He does. Okay. Oh, XEL's monthly. Thank you. Carmen, thank you for that. Dvorky, thank you. Mark Johnson, do you do this full time? No, I do it 15, 20 minutes a day. That's it. BP, ooh, British Petroleum. I like British Petroleum. Ooh, no, look at this. Jack and Jill fell down the hill, tumbling. No, sorry, it's coming down at the moment. Okay, do I even trade? Yes, I do. Which was the 3.5? Give me a second. Uptown Rich, thank you. Which are the stocks for today? Hold on a second. Mark Johnson. Total investment would also mean holding the shares. So on Uber, to sell one covered call, you need 100 shares. Yeah. Huh? You keep deleting my posts. No, it's not me. I have someone that monitors and gets rid of idiots like you. Crazy that you do 50% annual returns when Warren Buffett can't. Warren Buffett is a different type of trader than I am. He's not a trader. He's an investor. There's a huge difference. Okay, Warren Buffett buys to hold. He doesn't buy to sell. Okay, you gotta, if you're gonna insult someone, at least insult them properly. Okay, Chaz. So the 5 were PayPal, Oracle, Uber. What were the other 2? Hold on a second. Okay, thank you there. Marcos, Nokia. Didn't we look at Nokia last night? And okay. Oh, what happened to Nokia? Okay, yeah, Nokia just fizzled out yesterday. Up, down, up, fizzled out. We were looking at it. 30-day bottom here. 2 days up, right there. 1, 2, 3, right there. Now she's dropping down. Fizzled out a little bit. Chaz, can you share ages? PayPal, Oracle, Uber. Yep. Stocks and drops. Okay. Jolly Nerd, thank you. Mark Johnson, boom. What the hell is boom, Mark? It's a no is what it is. Come on, Mark, you've been here long enough. Look, June, July, September, December, those are months of the year. Months of the year. No. Okay. Best trade of all time, pretty sure. Nope, not at all. Andrew, 1% every week is better than any investor you've ever heard of. He's straight up lying. Oh, cool. Love it. I love it when people say this, just show up and automatically assume they know everything. Okay. Right here, 2025, right there. Okay, so Andrew, this is for you. Okay, weekly trades 2025. Now, for 2 years, I stood in front of the camera every single day and I shared every single trade I did. And there is over 2,100 videos on my YouTube channel to actually prove to you that I did live trading for 2 full years, shared every single trade. So let's slide down here a little bit. Oh, here we go. Week 27 of the year, week 1, quarter 3, June 30th to July 4th. Okay. 6 stocks. Kohl's, Devon Energy, Macy's, Riley, Hertz, Riot, 0.98. He's absolutely right. I didn't do 1% this week. 0.98. Okay, this account, 3.4. This account, 0.75. Oh, boo-hoo for me. I only made $1,500 that week on that one. Okay, week 26. Okay, week 26, June 23rd to June 27th, 6.2%. 0.9, 0.94. Okay, so I didn't make 1% there. Boo-hoo for me. Okay, 1.79, 1.57. Ooh, this is terrible. This is going to be the worst one I've ever done. 0.4. 3.4, 1.4, 2.7, 2.01, 2.7, 2.04, 0.49. Ooh, that's yucky. 2.7, 1.4, whoops, 3.8, 0.8, 4.4, well, that's nice. 4.2, 3.6, 3.1, 3.6, 1.1, 1.4. I share 3 accounts live publicly. You can take a look at every single one of my trades. Here you go, right here. Whoops, what the hell button did I hit? Oh, I don't want to do that. I want to do that. All right. Foot Locker, Macy's, Alcoa, Halliburton, Riley, Riot, Delta Airlines, Foot Locker, Starbucks, and Kohl's. Okay, here's the profits. Here's the, what do you call this? What do you call this? Timestamp, right there. Timestamps, right there. Okay, what kind of a trade it was, how many options there were, what the date and what the stock symbol was, and then the calls, the options, and the profits over here. Every single trade for the last 2 years has been logged on. Every single one. You don't like it? Ain't my problem. If you can't add, that's a you thing. But you can take a look at every single one on the website. Okay. What is this? 1.4, 1.7, 3.9, 1.8, 3.3, 2.6. It's not that difficult. And I'm not even trying to sell you anything. So I don't see what your problem is. Eli Lilly. Now, Eli Lilly's a little on the tough side because it's so overpriced. Not that it's overpriced. LLY. See, Eli Lilly's at $1,200 a share. You want to spend $1,200 a share, fine. But remember, $1,200 a share to do one covered call is $120,000 to do just one covered call. And then what do you make it? Okay, so the 1122, the 1120 is right there, $23 on 1,100 slot. Yeah, no, thank you. Okay, do you factor in the premium as part of the 1% gain? No. The premium is the 1% gain. Hold on, let's go to AT&T. Okay, now if you take a look at AT&T, the current price is $23.16. So if I buy it at $23.16 and I sell the 23s, I'm picking up 42 cents. What is 42 cents on a $23 stock? Calculator, if you don't mind. Okay, so 42 cents. Whoops. Clear that. Whoop, wrong one. Clear that. 42 cents Okay? 42 cents on a $23.16 stock. Okay? Divided by $23.16 comes to a grand total of 1.8%. 1.8%. And that's for 1 week. It's not that difficult. Pick a good company, make sure it's going in the right direction when you buy it, because stocks go up and they go down all the time. If you don't like it, give it a little bit. It'll come back down. If you don't like it, don't worry about it. It'll go back up. That's all they do. They go up and they go down. They don't come to your house and take the dog for a walk. They don't make you dinner. They don't take out the trash or rake the lawn. They don't. They go up, they go down. That's it. Pick a good company. Make sure, rule 1, never buy anything you do not want to hold on to long term. If you don't like it, if you don't want to take it to your grave, don't buy it. But if you buy it at $23.16 and somebody offers you more than what you paid for it, fine, let it go. Do what you want. It's a you thing. Okay? So let's get out of here. Next, do you factor? Okay, yeah, the premium is the 1%. F15046. What is that? PGR. PGR. What the hell is that? PGR. PGR. Progressive. Oh, interesting. Okay. Here's your top. Here's your bottom. Here's where it was. Here's where it is. Down, up. Okay, interesting. 204.66. The 205's going for 310. Well, that's more than 1.5%. Do you like Progressive? Where's the bottom? Take a look at the last 30 days. 30 days ago, we're at 200. We dropped down to 192, shoot up to 206. Is it still going to go up? You have to decide. Does that look like a good trade to you? Well, for me, I don't buy anything at the high. I don't. And I don't buy anything at the low. I will look for the low. I'll look 2 days up, and then on the third day, if it's continuing up, I'll jump in. So I would have jumped in there and more than likely got out right about there, because that's the 1%. I'm not looking to hit a home run. I'm not looking to retire off of one trade. I want consistency. I want predictability. I want safety, and I want profitability. I love the Lee family. I do. PGR Goose, how you doing? Linda, how are you? Paravalad. Who. Yeah, whatever. Billy, how are you? I. Okay. David, how you doing? Mark, are you sure your daughter wasn't just saying, Daddy, I want your attention? I'm pretty sure when she said, Daddy, can you teach me? It's not the same as Daddy, I want your attention. Okay? SpaceX, no dividends. What? It's only 3 days old, dude. Why it has no dividends? Because, fuck's his name? Elon Musk doesn't share profits. Okay, almost every single one of his companies doesn't have dividends. CRWV, is that CoreWeave? Was a good call, thank you. No, it wasn't a suggestion. 5-star, how do you log that? How do I log what? Please, what are the 5 today? So Oracle and PayPal, what are we looking at? All right. Dvorky, Michael Charles, 2 days old. Yep, lost. Yep, all right. Addie, how you doing? Brandon, how you doing? SpaceX, no dividends. Why? Because it's only 3 days old. Funky Cobadina. I love that song, I do. I must have missed it. Which one of your books explains the strategy startup as a beginner? Book number 1. Michael, thank you, Michael. Marty, do you advise against poor man's covered calls? Sure do, but not here. I give away one strategy for free. I've been trading for over 30 years. I give one strategy away for free. This is it. Simple, safe, predictable, consistent, no way to lose if you do it correctly. It was created for my 9-year-old daughter back in 2008. It's simple. Fitness K9. Richard. They are still new publicly. Yep, got it. Maine Coast Bulldog. Do you ever to call options? I mean, do I buy them? No, never. PGR. Okay, we looked at that one. Tiva. Albert, what is Tiva? T-E-V-A. No. Now, the reason I'm saying no to this is kind of plain and simple. Down, up, down, up, down. Yeah, it's coming down. If you like it, wait for the bottom to show up. If you like it. I've never heard of it, so for me, it's going to be a no. Keep on going. Albert Lewis, we already looked at Coca-Cola. We did. Tyler, thank you. Ziza. Just be marking stuff on the big screen. I'm not quite sure what you mean by that, but okay. Cooney. What did Cooney have to say? Your detractors do not deserve the explanation you are giving them. Thank you for that, Cooney. I'm going to have to remember that one. I like aggravating those people who think they're going to throw me off. Thank you for reviewing Progressive. Hey, not a problem. Can you look at the ticker Maine? No, Maine is a piece of crap in my humble opinion. I don't do monthlies. June, July, September, December, which means I can only trade it once a month. And once a month, well, that's only 12% a year. No, thank you. I just don't do monthlies. They just don't work for me. Leechy, how you doing, Leechy? Leechy B. Nick, hey, you still on? No, I'm just getting ready to leave. I just want to make sure I answer all the questions. And I think I'm just about done with it. David, thank you. Albert, thanks for checking Tika. All right, got it. All right, so that's it. No more questions. Wait a minute, got one down here. The markets are closed now. Are you placing the trades in the trading platform? What happens if the market happens and stock prices has significantly moved? Good question. Okay, this is just an example. Okay, none of these trades that I'm putting on here is just for educational purposes. Okay, now I do have a morning trading group which we trade live and they are recorded for people to see. Okay, XOVR. Leechy, what is that? XOVR. No. Okay, I don't do monthly. June, July, August, November. Monthlies just don't work for me. Not enough money. Just no, and no. Okay, no questions. That's it. We're done. Done for the evening. You guys have a great night. We're going to do this all over again tomorrow, and hopefully you guys learned something. All right, that being said, we need some mood music to close out the evening. There it is. No, it's not there. I need some mood music. Marty, you're welcome. There it is.
Wait, you don't write anything down after conversations?
This is Pocket. I never go anywhere without it.
You dream in the stars and dive into the deep, fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain, building your legacy through love and rain.
Good night, everyone. See you again tomorrow. Mahalo. Thank you. Well, that's a hell where you thinking your life as a yard keeps the daylight blinking. Every day's a quest. So deep in the storm.